Our next guest is Michael Eastham. He's the president of Fellowship Financial Group in Altamont Springs, Florida. Another repeat guest to the show. Michael, welcome back.
Thanks so much, Dave. It's always great to be here.
And you always have some great insight as to what's going on. So what do you make of the economy here? The economy numbers historically throughout this year have looked reasonably strong. Now there's some talk about fourth quarter weakening. What do you think the fourth quarter is going to look like, and how's that going to affect next year in terms of the economy?
Well, I just look back at the overall, 2018 in and of itself. I mean, the Dow started off just under 25,000. It flirted with 27,000 and then back down to where it is today at just under 23,000. I mean, that's an increase of 8%, a drop of 15%, and a heck of a roller coaster ride in between. Mm-hmm. I personally think that we're going to continue to see volatility in 2019 with the market headed south a little bit more. I mean, as much as another maybe 15 to 30% would not shock me at all because. Okay,
so you see the market dropping, but is that because we're going to go into a recession, or is that just because the market's overinflated? What do you think about it? Do you think we're heading for a recession, or do you think we might still get some good growth, but maybe not just quite the growth that the president had promised?
I don't think it's so much not the growth. I think look, you got great economic news. You got jobs, wages, consumer spending. You'd think the market was headed north, but the fact that it isn't really tells me that there's still a substantial disconnect between the economy and the stock market. So the correction is more of a reconnecting where the market should be relative to the strength of the economy.
Okay, so you're saying you wouldn't be surprised if we're down 15 or 20% in 2019, correct?
Not at all.
Okay. Interest rates. Now, can that happen if the Fed raises rates 3 more times, or do you think maybe they're going to raise them fewer times as the final thought?
I think they're going to raise them fewer. I mean, interest rates continue to be a huge concern, but think about it, Dave. I mean, the Fed doesn't want to be responsible for flattening or even worse, inverting the yield curve. That could be a significant problem for the economy. But just the other day, they raised them another 1/4 point. So you got the Fed funds rate at 2.25 to 2.5, and what happened to the 10-year Treasury? It dropped a little bit, 2.7 to 2.8. That is not a lot of wiggle room.
Michael, in spite of the fact that the Fed has created many a recession, I hope and pray that you're correct. Michael, thanks again for your ingenious words of wisdom, and it's good seeing you on the show.
My pleasure. Thanks so much.